Hello everybody, this is your favorite analyst coming in once again for a market recap. So today we're just going to cover the usual Bitcoin, Ethereum, see a few top coins and talk about the technicals, and the news in the market and whatever else is happening. So the total market cap is sitting at around $2 trillion at the moment, just above Bitcoin dominance at the standard for these days, so 41%, something around that, and Ethereum dropping a little bit more below 20%. Bitcoin still at the top, obviously Ethereum second. Cardano fell quite a bit in the past few days, so the market's looking a little bit red because of various factors. The initial spike downwards was probably as a result of some scared investors around the market, so there was a lot of up and down sentiment about the El Salvador adoption of cryptocurrencies, and is it going to work, is it not going to work, is it some larger ploy to try and topple the government. Obviously we're not going to put our tinfoil hats on, but we're just going to talk a little bit more about the things that we can influence on, which is our trading and investing. So Cardano, you can take a little look at the top coins. I strongly recommend you to actually use CoinMarketCap if you want to, check out projects on your own, because the top 100 on this list, most of them probably do deserve a spot in the top 100. I say most because there's definitely coins that definitely do not belong there. So moving on to the technical side, we're going to take a look at Bitcoin, Ethereum, and a few other coins. Ethereum still sitting at around the $3,000 mark. So it's still above. And the thing is, we hit the 4K mark. It was quite a zone for a retracement to come in the market because obviously, as I said last time, it's a psychologically important level. And a lot of people will be looking to take profits at that point. So regardless of whether a lot of people were taking profits out of the market and, the El Salvador situation, all of those things, very simply, just a lot of people wanted to secure their money and potentially enter at a better location. Now, I've plotted these Fibonacci retracement levels, which show us that a retracement back into the 3K level would probably be optimal. Even with this spike down, we have not ideally retraced, and the ideal level would be obviously the 61% to indicate a healthy retracement and enough profits taken out of the market to secure a nice position for the continuation of the bull run, right? But currently we're not quite there yet. So the most important thing for Ethereum is for us to see, is this 3K mark actually going to hold? If it does hold, then very likely we've retraced as much as we're going to retrace for the time being, and we'll continue upwards. And if it doesn't hold, we have quite some space down here until the 61% mark. So let me just delete this so it's not confusing you. If it doesn't hold, even though we had this nice rejection from the 3K mark, we're still kind of moving downwards at the moment, but this is just looking at the short term. Obviously, if we move on to the weekly time frame, we can still see a huge upwards move, and there was no bearish engulfing in sign, no indicators pointing to us that the market is crashing, which is obviously a good sign. And obviously, I would tell you if the market was about to crash, but that's not even in the talks at the moment. It's just literally people taking profits out of the market. So I would just pay attention, if you're trading in the short terms, or if you're making trades on a daily basis, I would definitely pay attention to this area around the 3K mark, see if we go downwards or upwards from here. And obviously, if you're trading for the long term and you don't plan on shorting the market or doing anything crazy in the short term, then pretty much waiting it out is the best way to go. If we do go back into the 61% area, it would provide a tremendous buying opportunity, being at around 2.5K for Ethereum. So seeing as the all-time high is yet to be breached, that would be quite a buying opportunity. Now, moving into Bitcoin, we can see a few of the important zones that I did plot before. So we have the 50K mark, which provided a false breakout type of thing. So we actually broke out, and then buyers could not hold the price up there. Support did not hold, and we just simply dropped back down. Again, I plotted the fib levels, which indicate that the best possible retracement would be around this zone right here. So this is very important. This is a very strong rejection level from the bottom, because as you can see from this level, the 37K or whatever, we pretty much broke 50K just in one big impulse, right? Especially if you move on to the weekly time frame, you can see what's happening. Now, Bitcoin is obviously a little bit less strong than Ethereum, in my opinion, judging by the fundamental value of it. So it provides less value than Ethereum does. So I would expect it to grow at a slower pace than Ethereum does. So regardless of that, the ideal retracement obviously would be here, whether you're a short or long-term investor. If you're investing for the long term, just wait it out. We'll let you know if there's some good buying opportunities around this level. But once again, the most important area at this point is the 42K mark. So this big and nice zone of support right here. Obviously, that's a zone to look at. If we break below, we might go into this level right here. If we stay above, we're probably going to be moving above the 50K mark soon once again. So it's all about sentiment in the market. It's all about how strong buyers actually are to hold these supports. Now, a few honorable mentions, as I like to say. VeChain created a very, very nice bull flag right here, broke out of it, and obviously that news came out. It's not news, it's just simply just a little dip in the market. Obviously we hit this zone right here, the next support that we have, which is around the 10-cent mark, and it provided similar rejection as with Bitcoin. And moving on to the lower time frames, we can see that we're pretty much consolidating at this area, and the zone to be looking at for VeChain would be this 10-cent mark right around here. If we break below this low, we may be moving into the next level, which is somewhere around here. So mid level, sort of, as I like to call it. But obviously going into the weekly time frame again, we see quite a significant growth. So basically my lesson of the day is pay attention to the Fibonacci levels, because until these levels are fully reached, you have no reason to worry. Only in case, see how the 78% lies exactly on this mid zone that I just plotted out. Only if we do actually break below this level should we start getting worried. But until then, and I really think that's quite a long shot at this point, the market is still fine, right? So pay attention to these patterns as well, this bull flag, stuff like that, because it's usually a good indicator. And I personally assume some positions at the break of a flag, not worried about the price falling down, because we're probably going to find strong support as we had with this rejection right here. So let's move into just Chainlink. Pretty similar situation, bullish structure formed right here. Didn't manage to hold this small support. We're sitting on top of the 50-period moving average at the moment. So Chainlink is looking to me even more bullish at this moment than VeChain is. But the next significant level of support should be found somewhere around the $20 mark. So pay attention to all of these zones. If you have any questions, let me know. And I guess I'll see you all in the next video. Bye.